ITC. There have been jokes around it to no end. That ITC had would be pivoted around the 200 rupee price. I think it was pivoted around that price maybe for 2-3 years, maybe more. Today, silently, that 200 has become 350. And if you are waiting for to buy ITC, that okay, it's every single day you look at it is around 200. Complacency sets in. You think that I have enough time to do research, to identify and understand this company, and in 5 years I think it will make a lot of money. But I will time it. I will try to buy it just at the point of explosion. But if the stock continues to move up gradually, with every 5%, 10% move, it will be 10% too expensive for you. You will want it to come back to the price at which you had originally anchored your expectations. But rather than coming back, it moves up another 5-10%, and then it moves up another 10%, and then one day it will move up 30%, and then you will never be able to invest in that stock. Because we think there is a lot of time, but when it comes to execution, markets are brutal. More often than not, you will never get the time. Let me take some specific examples. BSE, my thesis was anchored in BSE on two things. I first looked at this company when it was hardly 1,500 crore market cap, 1,500, 2,000 maybe. The idea was that there is room for two exchanges to be in the country. BSE has been a leader. NSE today obviously is the number one exchange in the country, but BSE would continue to be around. And if you are betting on, like people have bet on, on the domestic retail participation in markets. If you are betting on markets overall, you cannot not bet on the exchanges. So it was always a no-brainer. But the stock did nothing for a very, very long time. And one of the key tenets for me was to, the reasons to me to invest was that I always felt that as and when the NSE IPO happens, BSE would get significantly re-rated at that point. And therefore, there would be a point of inflection when you will get to buy. And what's happened is last 3 years, there's been a lot of noise around NSE IPO. The IPO is nowhere close to happening even now. But BSE has silently continued to move up to a point where it is already 4-5x from the point at which I first looked at it. And I never got, let's say, time to build positions personally to the level that I would want to be comfortable with. Same thing happens with stocks. Let's say IRCTC. This kind of a move up that you see in the chart pattern, it is very difficult because you think that the stock will come down, correct, the profits are not going to move up overnight, and therefore you will get time to study the business and invest. But the stock rarely gives you time once it starts to move up. The move up is, and look at Tata Elxsi. It comes, boils down to being the top conviction that I had all these years, and yet when the stock moved up significantly, I was caught short with the kind of position I personally wanted to have, simply because it did nothing for a very long time, and then a 500 rupee stock, at the onset of COVID, went up to 10,000, and once it moves up the first 20-30%, it's very difficult for you to build large positions. And this has also been the critical learning, which brought me down to the thought process that no longer will I try to time my investments. I will try to rather uh, continue to invest gradually, irrespective of the price. If my horizon for a stock is 20 years, it does not matter what the price is today. In a 20-year time frame, it will still be a blip. And therefore, the better thing to do is to keep investing every month, every quarter, every opportunity that I get in every correction. So, in fact, while people who may have invested this in this stock at 10,000, and a disclaimer, I have investments even at that price personally. For me, for someone like me, I am actually salivating at the opportunity that the stock is giving me a 30-35% correction from the top, allowing me to get to build incremental positions much cheaper.
Tushar, I can, if you allow me to come in here, because I have a very relevant point here regarding this SIP thing which you are discussing, and which I believe many investing market participants don't pay attention to. So like we all have heard about the story of Infosys stock, if you'd have bought Infosys in 2000 at the height of the Y2K mania and held on to the stock for 8 long years, you would have made no returns. So what Tushar is saying is not that you buy at the top and just hold on to it. He's saying incrementally buying at all prices. And you can go back and check that exercise with Infosys. Even if you would have started investing in Infosys from the point of that March 2000, when it was available at something around 200 times P, and you would have kept on the SIP every month for the next 8 years, your XIRR in Infosys, where you started at the very top point, would have been in excess of 13%. And if you can get something like an Infosys or a Tata Elxsi much earlier, like what Tushar has done, so he's not investing only at the top. He has been investing since 2018, 19, 20, right? And you just keep on building on your position. That gives you a completely different result compared to what people perceive in the market, right? So sorry, Tushar, I just wanted to
No, no,
make it clear.
very, very welcome interruption and a very valid point, Ankit. And again, no, guys, I must reiterate that this is not about one stock. This is not about one sector. A lot of people here know we have multiple investments in pharma. I can give you 10 examples in pharma that would fit the bill today. But I can give you examples from 10 other sectors. The idea to do this exercise today to pick up 5 or 6 examples from different sectors, and these are all stocks that with a long term mindset. The idea is that there is no right or wrong approach to investing, but my personal learning, and I think Ankit also does this very beautifully, is that he does SIP, which he did not mention, but he is actually a proponent of this theory himself. The idea is that you identify any company. Behaviorally, one of the biggest challenges for us is to, when you identify something that you think will do really well over the next 20 years, right? The first thing that comes to your mind is that I have a lot of time. The stock will do well over 20 years, or this is a 20-year investment. So even if I don't invest today, let me make that money elsewhere, and I will come back to this stock 2 months down the line, or 1 month down the line, or 2 days down the line, and I will invest that return from another stock, and I will take a larger position in this stock, right? What happens is, let's say you invest in a, let's say you had two let's say Paras, right? No, let's take a different example. Let's say Paras today at 650 rupees. It has moved up 4x from the IPO, from 175. It went up to 1300, is corrected 50% from the top. Depending on how you look at, there's a lot of correction already done, but there's a lot of fraud probably already there. So it is very much possible for you to take a view that this 650 will come down to 500,